Good afternoon, everybody, and welcome to the ActivTrades Monday Market Matters webinar for the 18th of November 2024. It's Paul here. Welcome, everybody. Here we are to talk today about how to trade using highs and lows. What should we talk about today? Well, as I said, I appreciate we do have a truly global audience who join us, and that's fabulous. And I also recognize that we also have a broad range of people who join us, some at the very start of their journey, some of them, very experienced traders. You are all welcome. There'll always be something to take away that you can help utilize in improving as a trader of your own. But, if you're new to Monday Market Matters, we always start off with a little look at the news, what's been going on in the world and what we can expect this week. That is always useful. And then we're going to talk about the main education element. Namely, why are highs and lows so useful? Okay, what are they? Why are they useful to us as traders? And of course, most importantly, how do we make best use of them? And how do we combine them with price action trading to give us a trigger? It would be fascinating to know, those of you joining us for the live session today, how many of you already use highs and lows in one way or another in your own particular trading? Be great to know. You could put that in the chat box, what your own experience is. I truly also understand that some people who are at the start of their trading journey may not really even understand what I'm implying, and that is absolutely fine. That's what these sessions are here for, to help educate you so you're able to improve as a trader. But we'll look at that, okay, all about highs and lows. And then we'll, as always, finish with a check on the live markets. They, of course, have been rather interesting these last couple of weeks. So Patrick says only use it as a reference, okay? Fabulous. Thank you, Patrick. Okay, I appreciate that. It'd be interesting to see, at the end of this session, whether that idea changes or whether that helps you. As I said, these sessions are here to help all of you, just educate you, guide you, just help you move further along in your own trading journey. As I said, I appreciate that there are some people joining us who are at the start of their trading journey, and Monday Market Matters is ActivTrades' regular webinar series, with the aim being to help traders start the week in the right frame as we prepare for the opening of the US markets in about 25 minutes time. So every Monday at 2 o'clock London time, we look at major news for the week ahead, so to be aware of it. We always do a main piece on some education to help build your trading knowledge. We'll always have a little chat and a look at the ActivTrades platforms and tools as we look at the live market at the start of the US session. So there is always plenty for us to talk about in our hour, always lots for us to cover. So without further ado, let's have a look at what's going on in terms of the news. Now, I say this every week, okay, but without fail, that if you are new to trading, I don't expect you to be able to analyze the economic data, but it is important to know when that formal economic data is being released. And the way you do that is to use an economic calendar. There is an economic calendar on the ActivTrades website, and there are other ones around the internet as well. So there's no excuse not to be able to understand and have a look at an economic calendar, because these pieces of formal economic data that when they are released, they can induce volatility into the market. Volatility is a double-edged sword, right? When you're on the right side of it, it makes trading fabulous. When you're on the wrong side of it, it makes trading challenging. So it's in your best interests to understand the calendar and to understand when that news is coming out. So, of course, last week, we've had plenty going on in terms of the, let's say, the repercussions of Mr. Trump winning the US election and how that is impacting markets, not only in the US, but also globally. And we're starting to see elements of that in terms of both positive and negative sort of connotations. And we'll look at that more when we look at the live charts later on in this particular session. In terms of what we've got going on, well, we've got it's a bit of a UK week, okay? I would talk about that in terms of tomorrow, not here, but we do have in the UK, we've got monetary policy report meetings. We also, as you say, we've got the minutes from the Australian Royal Bank of Australia, their formal last minutes. We've got Canadian inflation data, Australian American building permits, and the Japanese balance of trade. On Wednesday, here in the UK, 7 o'clock in the morning, we have the CPI, okay, the UK inflation rate year on year. People are going to be interested to see, is that ticking up or is it at least not coming down as fast as maybe people were hoping? Because, of course, that will have an impact upon how fast and how deep Mr. Bailey goes with his interest rate cuts, which, the landscape, it might be said, is changing. Thursday, interestingly, we have Mr. Ueda, the Bank of Japan governor. Okay, he'll be speaking. Also, Mr. Bullock, the RBA's, Royal Bank of Australia's governor. And we have American unemployment changes and the Japanese inflation rate. Then Friday's quite a busy day. Yes, first thing we have UK retail sales. And of course, that gives a little bit of an insight into the strength or the lack of with regards to the kind of a consumer economy. But also, as you can see there, we've got French, German, European, British and American services and manufacturing PMI flash numbers. So that will be undoubtedly keenly watched, okay? Keenly looked. So plenty going on this week. And as I said, it's important for us to know what we're talking about in terms of, understanding when that data is coming out, because we'll see what impact we'll have. Another piece of data which won't be on the economic calendar, but is keenly awaited this week, is that we, of course, have the earnings season, and we have the results from NVIDIA, and they're coming out on Wednesday evening after the market closes. People will be intrigued and interested in that, okay, just because of the sheer size of that instrument now has a huge impact across all markets and impact globally. So, as I said, it's important to know when these pieces of data coming out, because it will have an impact in particular on economic and investor and traders sentiment. Let's have a chat about how to trade using highs and lows, okay? And that's what we were just looking to do that, okay? And understand how that basically plays out. So lots of people, as the slide says, are interested in analysing markets to understand if there are simple, repeatable patterns and concepts that can provide opportunity for us as traders. Ultimately, that's keenly what we're keenly interested in. One of these repeatable patterns is the use of highs and lows within markets, whether they be the previous day's high and low, or the previous week's high and low, the previous month, the previous quarter, the previous year, maybe even the previous decade, depending upon your outlook. Today's session, we're just going to mostly focus on how we could use highs and lows on an intraday basis, all right, and mostly for FX. However, and that's only just because we only have a period of time here, okay. But the concepts we'll talk about, the patterns we'll talk about, they are applicable to pretty much most time frames and also most instruments. It's just that my own personal experiences, I use them a great deal in my own intraday FX trading. So, that's where I feel I can speak with the most, with the most confidence and the most authority. But as a general, the concepts will work across all time frames and all instruments and variations of it. And I do appreciate that we have a broad range of what people like to trade here. Okay, as I said, primarily FX indices and commodities tend to be my particular favorite instruments, but I do recognize other people like to trade that. But as I said, today we're going to focus upon how we could use intraday highs and lows. But let's just take a step back to understand, before we start looking at patterns, I always want people to understand context. Okay, context, pattern, trigger, CPT. You'll hear me talk about it repeatedly during these sessions. It's not enough just to understand the pattern. What we want to do is to understand the context of what's going on, so that we're in a position to make better choices, better decisions. So firstly, we just want to understand the market players and why they might be interested in the highs and lows of markets. And what we're going to talk about is maybe it's time to grow from thinking purely like a private trader and starting to think about who else is operating in markets and who might be on the other side of the trade in terms of dealers, or as they these days like to call them, as market makers. So Patrick raises a question. I've observed that the euro dollar has been moving up and down around 105.54 last Wednesday low. So if I just enter long, if it is to 20 to 30 pips below Wednesday low and shorted at 23 pips higher than Wednesday low, so far so good to make 10-30 pips profit for the past few days. Am I doing it correctly? It's an interesting question, Patrick. If what we'll do is just if I can just park that for a moment, maybe we'll have a little look at that when we look at the kind of the live markets, all right? And also, when we're talking about, for example, you're talking about, last Wednesday's low, maybe by the end of the session here, you might have a little bit of a better understanding of what I mean by the low and how we can utilize it and how that plays out. So if it's all right, we'll just park that for the moment, but we will take a little look at that when we move on to the live markets. But thank you for the question. All right, thanks for the interaction. And this is education for people who are new to the markets, okay, new to engaging markets. It's interesting to know who are the other people who are involved in markets. And as I said, I'm going to mostly focus on intraday FX because that's where I primarily use a great deal of this kind of work myself. So you generally tend to have, kind of four types of market participants. Number one, the market makers, dealers, what might have been called dealers in the kind of old days, probably showing my vintage there, but very generally tend as market makers, okay. And as the name implies, that's their job. They have certain privileges that allows them to have, good inside knowledge and depth of understanding of markets, but in that they are also there to effectively to provide liquidity and make a market for us. The second kind of type of market participant is also corporate accounts. I think sometimes people forget this, certainly in the FX market, but the FX market, really it's there to facilitate international trade. That's its main job. Okay, we might be speculators in it, which are group 3, but ultimately, it is there to help facilitate international trade. And so most companies who have any kind of international business will have, corporate accounts dealing in FX markets. Some truly big global companies, they'll have entire treasury departments that manage their risk, their exposure to various different types of FX risk. And so they will manage that, okay, the best they can in markets. As I said, then there's the speculators from ourselves, private, but also, larger speculators like hedge funds. And then the kind of the main behemoth in FX, namely the central banks. So these are the kind of four major types of market participants, when we kind of break them down. And it's interesting to understand and know, who we're working with, who's working against us, who's working with us, and actually how they view markets and what they're looking for, because that can give us insight into how we may want to choose to operate ourselves. Here's what, a little thing that I learned many years ago that is really about, a dealer's motto and about what they understand. Two simple things, namely, they understand that market moves are rarely one way, and dealers understand that the majority of the time, intraday markets are range bound around about 80% of the time. Okay, so 4 days out of 5, they are generally range bound. Okay, now we can get into depth about understanding how you define a range in that terms of an intraday, but I just at this moment, we will work on the fact that 80% of the time intraday markets are range bound. They also know that they should never trust the first price. All right. After a major news release, dealers know that very often the first print is the knee-jerk reaction of that market and can often be wrong. Not every time, but very often is wrong. And having that understanding of context allows them to operate. And it is understanding that context that I think is very important for us as private traders, as I said, to understand, how other people are operating in markets and what they are particularly looking for, what they're particularly engaging, how they are effectively effectively viewing those markets, because that can be pretty useful and insightful help for ourselves. So if I look at at what in the old school would have been like a dealer's motto, what we can learn from dealers and from market makers is that they are always fading a move. So if you want to think like a market maker, then ABF, always be fading. And I'm going to explain a little bit more in depth about that. And when we start to look at some charts, sometimes it's a little bit easier for people to understand and grasp that when they're actually able to see it in a let's say a visual context. But that's what we're particular with dealers. They're always looking to fade a move. Okay, so if you want to think like a dealer, then ABF always be fading. And I'll put that into context over the next few slides as we look at some charts and try to understand it, how that plays out in markets themselves. So what do we take away about dealers from that? Well, you have to take this on board. Dealers, they only make money when orders are triggered. So they are more likely to bully price towards where the biggest number of orders are. Think about that, okay? If those dealers, if they are, they get paid on the commissions, okay, from their trades, okay, that's how they do so. Well, then they're always going to be wanting to sort of push price towards where the biggest number of orders are. And in previous sessions, we've covered where some of those orders are sat, and we'll go into it in a bit more depth here. Is that thinking like a dealer means that we sort of change our way of operating, maybe just change our perspective. Certainly if the way you've been operating as a longer term trading, maybe on your daily charts and above. And this is one of the things that kind of defines my own approach, is that, longer term and swing trading, I tend to be a trend follower, as I said in my bio at the start. But on a shorter term intraday basis, I tend to prefer operating as a mean reversion or reversal traders. Right? Remember, the many traders, many dealers, they know that basically, the first move can be very much a knee-jerk reaction. They're always looking to fade that, and we'll see how that shows itself up in the next few charts. So having had a little look at the context, of course, what we want to see is, well, all right, that's all well and good, Paul. How do I see that on a chart? What does it actually mean to me as a trader? How do I make use of that information? Well, the reality is that markets are still traded by humans. Yes, okay, algorithmic trading is on the increase, but even those algos are still, for the most part, programmed by humans. They still represent human biases, both good and bad. And the thing is about humans, okay, is that humans look at charts for usual places to do business. This is why you see things like big round numbers being very interested. So, for example, in some particular instruments. So, for example, for many years, okay, we saw on the Russell, okay, Russell 2000, the actual 2000 level was very key. If I look at cable, cable recently, that has been pivoting around, the 130 number. Look at pound against Canadian dollar, that's been pivoting around the 180 number. Look at the dollar index, okay, it found support at the big round number of 100. Big round numbers are still, okay, they are still very viable because humans still look at charts for usual places for them to do their business. So big round numbers is one of them, but one of the other usual places is previous highs and lows. So you'll sometimes see me refer to a PHL, which is the previous high and low, and it's at those highs and lows that they are tradable opportunities, especially on an intraday basis, and that's what we're going to have a little look at in a bit more depth now. So why are previous highs and lows very tradable? Why are they of interest to me as an intraday trader? Because there are usually a lot of stop loss orders there, okay? So they become attractive areas for dealers. Remember what I said, dealers only get paid when orders get triggered. So they are always intrigued and interested in pushing price towards where the biggest pools of orders are. What that means is that offers a point for a possible mean reversal trade, okay, mean reversion, and that might be an ideal setup for a reversal trade that allows me to sort of trade a reversal back into the range as part of a mean reversion strategy. So with that in mind, let's have a look at a few simple ideas. So this is just euro dollar on the 15-minute chart, okay, over the course of part of a week, a few days. And what I just want you to see is, this was the high on this day, and just to look at how price reacts, okay, how price reacts when it comes through the previous high. In this case, okay, it comes through it, but then it flips it, okay, it flips it from resistance to support before we rallied up there. Then if we look at the low of the day here, the low of that particular day, well, what we see is that price comes into the session above it, and then it dips beneath it. Okay, it dips beneath the low of the day, but then it reverses and fires its way all the way up. All right, for the rest of the session, for the rest of the London into the US session. Then what we see is the high of that day. Well, the first couple of times that we come up to it here, it's rejected. It's rejected away, okay, from that particular previous high. Now it's rejected, and then it slices its way through. But even when it comes back beneath that previous day's highs. And that I just wanted to take that's a scruffy example, okay, because it's very easy to show very clean, simple, perfect, but actually it's about how do we understand and utilize and operate that in everyday markets. And so what I always tell new traders is, especially new intraday traders, is just to take some time just looking at how markets react to previous days, previous weeks, highs and lows, even previous months highs and lows, and you might start to be fascinated to actually see how that price action unfolds for us when you're looking at it through that particular prism. So as part of my own routine, my own plan as an intraday FX trader, and when I work for funds, that's what I work for as funds as an intraday FX trader. I want to know, what, if any, major news is being released. That is very important. That's why, the first thing we talk about here, even on our session today, is right. Well, what's the news that's coming down the pipe this week? Okay, I want to know where it is. I don't want to be caught short or caught on the wrong side. I want to know and understand. I want to look and identify the previous day's highs and lows. I want to be able to see that and know where they are in relation to where the price is coming into that market. And also weekly highs and lows are very good as well. I also want to know any significant big round numbers because, as I said, humans remember them and humans will operate them. Because what I'm interested in, remember what I said, is that, dealers know that 80% of the time intraday markets are range bound. I'm looking for when price reaches those areas of previous day's highs, previous day's lows, then I'm looking at, is there an opportunity? Not a guarantee, never a guarantee in trading, but is there an opportunity for a mean reversion setup? And I'm looking for a very simple trigger. But remember what I was sort of saying earlier, CPT, context, pattern, trigger. All right, that trigger could be pin bar rejection candle, an engulfing candle, a key reversal, double top or a bottom. Today, we'll focus on double tops and bottoms, but, if you want to understand what pin bars are, engulfing candles, key reversals, you can look on the ActivTrades website under the webinar archive. You'll find I've done previous sessions on those specific triggers. You can also look at them on the ActivTrades YouTube channel, which you'll find access if you just go onto YouTube and search for that. You'll also find videos on there. So there is plenty of educational content there that you can feast yourself on, okay, if you're at the start of your trading journey and just want to understand what those particular simple price action trades can be. But as I said, today we're just going to focus on double tops and double bottoms, just a nice one-off simple pattern that you might see at particular previous days highs and lows. I appreciate many people here will understand what a double top or bottom is. Many people will not. They're completely new to trading. Kind of clues in the name, namely a double top, okay, is where we normally get, two peaks followed by a rejection down. A double bottom looks like a W, okay, a double bottom before price rises. So you've got an M at the top, a W at the bottom, okay, and there are variations on this, but today we'll just keep it nice and easy, keep it nice and simple. I want new traders to be able to just go away and start to be able to recognize and see this in their own trading charts. Why does a double top or a double bottom work? Why does that trade work? What's relevant? What's going on there? So Now, I admit I am a big fan of the game of rugby. I do appreciate that we might have people from a global audience who may not be rugby fans. Okay, and that's fair enough. That's what keeps the world interesting. But in the game of rugby, you have very often a starting point can be what they call a rugby scrum, and you can probably see in that photo there. It's like the two teams, they kind of hustle down, set themselves up, and then basically they interlock and they have a fight over control of the ball. Now, in trading terms, I want you to think of price is like the rugby ball. Okay, rugby ball is being kicked about between the two opposing teams. For us, that is the Bulls and the Bears, as they try to wrestle control of the ball from the opposition, as they try to wrestle control of the price. Are we going to go bullish or are we going to bearish? At some point in a scrum, either one team is likely to make a mistake or they're likely to tie it, and the ball, okay, which is price action for us, is likely to get pinged out. For us, okay, what happens is, in a rugby game, there's normally one team that has maybe a little bit of bias, the team who puts in the ball. But in markets, because price has already put in an overextended move, it's already probably been in a trend move before either the double top or double bottom pattern, we have a higher probability of anticipating it shooting out in the direction of a reversal. So let's have a little look what that actually means. And as I always say, if you need a constant reminder, okay, of a double top pattern, well, if you just open your left hand, okay, and just look at the palm, you will see a constant reminder of a beautiful double top pattern there. Okay, so it's literally seared into your palm there. Okay, you can never, once you can see it, you can never unsee it. Now, the important thing is, and those of you who've joined me throughout all of these series, is you'll hear me talk about, ideally, what I'm always looking for is a confluence of events, okay? Confluence events, where we get 2, 3, 4 things coming together at one time and place that give me an indication that there is a higher probability of price moving in one direction over another. That's it, just a higher probability, and that's enough, all right? So, some patterns, here we go, some patterns and signals, when seen in combination, provide very high probability setups, okay? So what we want to do is consider, price action patterns, okay, in terms of double tops, double bottoms, the M and the W. Also, the location at where they happen. So if it happens at the previous day or the previous week's highs and lows, or at a big round number. Other more advanced elements is also about, how far out of the Asian range, okay, if we're trading the London FX session. And also sometimes what can help is also in terms of the indicators, in terms of using something like an average true range. I'll cover that more in depth in a future session, but really that's just looking if price is already overextended in relation to its average true range for that time setting. So with that in mind, we have to think, well, okay, Paul, we're looking for confluence events, when we like to see, things like double tops and bottoms or other price action rejection candles happening at previous days' highs and lows or previous week's highs and lows, we're starting to get a confluence. But also, depending upon, when is the most liquid and most volatile periods for individual currencies, well, you can have a look at the kind of the sort of the timing of the chart. All right, excuse me, let's just get rid of that. It's just as I always say every week, I am a better trader than I am an artist. So there we go. So for example, all right, if we're trading GBP, and an awful lot of the main focus of my intraday trading is GBP, well, not unsurprisingly, okay, I am interested, okay, at the start of the London session. The London session is invariably where the vast majority of sterling trading will occur. Same for euro, same for Swiss franc, okay, into that European session, as opposed to Japanese yen. And Aussie, well, not unsurprisingly, the vast majority of their trading volatility occurs during the Asian Pacific session. That shouldn't really come as a major surprise to people. It's about understanding that. But once again, it's that confluence. Okay, if I am trading, let's say euro sterling, well then, if I see a double top at the previous day's high during the London session in euro sterling, well, I have another Confluence, okay? It's another 2, 3, 4 things all coming together in one time and place that gives me a higher indication of, where price is more likely to work towards. So I'm just trying to put in a few examples here, okay? So if you're a Kiwi dollar trader, okay? So Kiwi dollar. Well, what we have here is you can see that this is the price action here that's going on. This is a 5-minute chart. Now, what I have here is I have an indicator which is freely available, okay, for both MT5, MT4, both of which are platforms for ActivTrades clients. Also, you can find alternative ones on TradingView, which is also available to ActivTrades clients. What you might see here is that these two lines here, blue lines that's drawn on, one of them is the previous week's high, and one of them is yesterday's high. And what we can see is, in the Asian Pacific session, what happened was the Kiwi dollar rallied its way up there. And then what happened? Well, it hit this zone here, okay? And when I say zone, it's 73.64 to 73.68, so it's like 4 pips zone. It's it's not a huge zone, but we can see there, and what can you see there is that is an M pattern, isn't it? It's a double top in the Kiwi dollar at the Asian session at the previous week's high and also at the yesterday's high before price is rejected and runs its way nicely down to the 200 period moving average, which is the green moving average there. So that's just quite a simple example of confluence events showing up a double top at a previous, well, in fact, in this case, previous day's high, previous week's high. Once again, it's in the right preferred time, certainly for Kiwi dollar, and you can see that actually it turned up, it rejected, and then basically reversed. Remember what I was saying is that 80% of the time, FX markets on an intraday basis tend to be range bound. So we're sort of touching all of the pieces that we've talked about here today so far, all of them coming together in that one time and place that gives me the idea of where the highest probability trade would be. And certainly for a double top, there are very aggressive ways to trade it. But if you're a new trader just looking, well, invariably what we kind of see is once we have this sort of 1, 2, 3 of the double top, the M pattern, once we break through the point of 2, well, invariably that's when traders looking to get short, and normally their stop loss would be above the high of the M in the case of the double top. There are other ways and there are aggressive ways to trade that, but for today, as a nice standard way to identify and trade them, that's what we'd be looking for in terms of the way they operate as a double top. Interestingly, this was a case of the pound against the Swiss franc here, and what we can see is the 5-minute chart. We can see that the previous day was a trend day. Okay, that was a previous trend day. Then what happened is we went into this overnight Asian range here. Hopefully you can see how kind of quiet we were. Okay, just very quiet. No surprise if you think it's the Asian session and you're trading the pound against the Swiss franc, 2 European currency, so the vast majority of the main guys trading this there will be at home in their beds. But next morning what happens is, interestingly, what I'm intrigued is that price actually popped down, and then during the London session put in a double bottom there, didn't it? Put in a double bottom and launched itself higher. Where did that move end? Well, the move ended at the previous day's high here. We can see that basically having used that to power us up, we then basically rejected, we rejected previous day's high, a scruffy double top, before actually we dropped our way down during the American session. So the green boxes are the American sessions, the grey boxes are the Asian sessions, just to help people get an understanding of what you're looking at. So as I said, it's an interesting chart there, but it's about where did price reject, where did price run to? It ran to the previous day's high, and once it was there, well, price basically reversed itself, and reversed back into the range, and actually it went back into the range and much further. But you don't know that when you're taking the trade up here, you don't know it's going to drop like that particular. It's a case of just us being able to sort of understand the context, understand the pattern, and understand the trigger. So we'll go and have a little look at the live markets in a moment. Maybe we'll be able to see if anything sort of similar set up today. But Your task from today's session, and those of you who join me every week will know I always like to try and set a little homework for people to take away. Your task from today's session is to go away and open any chart on an intraday time scale. So maybe a 5-minute or a 15-minute or a 30-minute chart. Draw forward, okay, the previous day's highs and lows. And as I said, yes, it is possible to get indicators that will do that in both the trading view, MT5, MT4, etc. But for the first day or two, just draw forward the previous day's highs and lows. Just look on them, just look at it and draw it forward. Draw on any significant big round numbers as well. And just look at, what actually happens when price reaches those levels. Does price cut through it like a knife and power on through? Or does it reverse and revert back into the range? If it does reverse, were there any significant price action signals or triggers to alert you to a possible trade opportunity? Was there a rejection candle like a pin bar or an engulfing candle or a morning star, an evening star, or a double top or bottom? Just take a look there, okay? As I said, you can get indicators that will at least identify those levels, and I have no issue. You can see I use one myself. However, you are also, for the first day or two, just practice drawing in. So just get your eyes used to sort of looking for where the previous days and the previous week's highs and lows are. And what might kind of fascinate you is to see how much of a coincidence price kind of moves towards those levels and then reverses and moves away from those levels. And that can be, as I said, that can be quite, quite revealing for you in terms of your overall analysis, in terms of your overall understanding of markets and how they operate. So before we switch across to the charts, just remember in conclusion, Monday Market Matters is here to support you in 2024. Every Monday, 2 o'clock London time. News, education, active trades, tools and markets. You've heard me say this before. I said at the start of the year, it's going to be an interesting year in markets, and it has been. And I hope you'll join us to enjoy the journey for the remainder of the year. Remember what I talked about context, namely, it's always important to think like a dealer, to understand what a market maker and what they're coming from, what they're after trying to achieve. Always be aware of impending news announcements. Remember, make sure you're checking the economic calendar. Market makers work on the premise that 80% of the time, intraday FX markets are practically range bound. So learn how to trade reversal and mean reversion setups. Watch how price reacts around previous days and previous weeks, highs and lows. And there are quite a few different, price action triggers you can utilize at those levels. But the double top or the double bottom in an A or an M or a W formation, they are useful here as well. So with that in do, we always have a little look at the live markets and we'll see what's going on there as the start of the week. Maybe there'll be some, undoubtedly there will be some reactions around some previous days highs and lows, and whether they provide us a double top or double bottom, we don't know. We'll have a little look, but we'll just, as always, just do a little bit of time looking at the markets as they are setting up now that basically the US markets have opened for the week ahead. Just before we switch across to the charts, just a reminder that we are here next week. Okay, Monday Market Matters. All right, every Monday, 2 o'clock London time. Next week's the educational piece will be how to use fractals to start your week. Okay, so I have talked about fractals in the past, but what I'm going to talk about is actually how you use fractals to start your week and just give you a little bit of help and a little bit of insight. As always, you can register on the ActivTrades website or use the QR code there, okay, to basically to join us. And as I've said before, ActivTrades now have their own channel on YouTube, so be sure to check them out. Be sure to search them on YouTube and be sure to subscribe. Lots of these videos will go on there as well as being in the webinar archive. So I do appreciate that sometimes it helps people to be able to watch the material 3 or 4 times just to truly understand it. So As I said, you'll find most of the Money Market Matters webinars on there, but also on the webinar archive. So be sure to subscribe and you'll be told when as and when they are uploaded and updated. And if you've got any questions or comments or feedback, or perhaps maybe there are topics you'd like me to cover in future sessions, well, then you can do that. Okay, there you can see the ActivTrades details there. In particular, although there's a number, there is also the email address, englishdesk@activetrades.com, and you'll find that it will be great to hear from you. So if you'll just bear with me for a moment, what we'll do is we'll switch across the charts. We'll have a little look at what's going on in the markets and see also what, if any, reaction there have been to previous days' highs and lows. So just bear with me a moment and we'll switch across. This is, if you're new to trading, new to joining us, this is one of my profiles. It's a profile I have for the US dollar. Bosh. So here I have, and I've just set it up this way. It's not difficult to set up, quite simple, really. And what it allows me to basically do is, I've got it here, Aussie dollar, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, dollar yen, dollar index. Okay, so hopefully you can see that very quickly. I can take just a good snapshot of what's going on with the dollar, gives me a good insight, and we'll look at what's going on here. So, gosh, let me just clear some of this down. As always, you've heard, those of you who've joined me, we talked all the way about, if you're going to trade FX, you want to have a good understanding of what's going on with the dollar, okay, and take that on board. And there are previous webinars, okay, that I've provided that have talked all about trading the majors. If you've not watched them, by all means, please do so. You'd be interested and fascinated to see that and help you. This is the weekly chart. Now, I appreciate we've mostly focused today on looking at intraday FX, but as I said right at the start, whilst I might focus on that myself, the concepts work across other instruments, other time frames. And so immediately I see here, this is the weekly chart of the dollar index. After a nice run up, price at a previous level, it double topped there before it dropped its way down. Earlier this year, we had, not a particularly pretty, but it was scruffy, but, having come back up to a previous level of resistance, we then basically also put in, a double top there. But most recently, we had price here come down to 100. And then what do we print here? We printed a double bottom, okay, at the weekly 200 period, at the big round number there, okay, before we reversed off that and headed all the way up, okay. And that's what I was just trying to get across. Even though I'm normally looking at an intraday basis, the concepts work across all time frames. Remember, it's confluence of events, looking for 2, 3, 4 things to come together at one time and place to give me an indication of a higher probability of price moving in one way over another. And you can see for yourself that we have been, let's just clear this down a little bit. We have been on an absolute tear, okay, with the dollar. Okay, so if the dollar is strong, that's going to have an impact on all the other, on all of the other charts there, okay. But we can see dollar strong, which means that all the other majors are probably likely to be weak, and we will look at that, okay. And I'm keen to sort of see how that particularly plays out. Let's just dollar there, daily chart, 4-hour chart. Let's look at boom. All right, so that has been on the 4-hour chart. That has been on a great uptrend, and now we're just kind of running out of steam a little bit. All right. Remember, as I said, we've got quite a bit of data out this week. A lot of people will just be taking a little bit of ease because, of course, there was a couple of issues at the end of last week with regards to some of Trump's picks, and in particular his Treasury Secretary, and markets had a little bit of a nervous end of the week last week. Okay, so we're trying to understand that, but we'll see how that gets cleared. All right. Ultimately, what we're looking for is where's the trade opportunity. The thing is, if I look at the opposite of the dollar index, which is pretty much the euro dollar, we talked about how basically the dollar index had put in a double bottom at kind of end of September, before it basically moved higher. Well, if we look at euro dollar, well, we put in a double top there, okay, at the same time, the flip, and then you can see for yourself that price has powered its way all the way back down to, well, down to what was really effectively the kind of lows of the previous year. But it all started here, and remember, as I was saying, even at a even though we've talked mostly about intraday trading, the concepts, the patterns, the triggers, once you understand them, once you see them, once you have the cognitive recognition abilities, well, you can't avoid them. Okay, they will always be there for you to be able to see, and that's what's occurring there. Let's just have a little look at how that's continued. Yeah, let's just okay. So what I'm intrigued here, okay, is just looking at the. Bear with me 1 second. Just let's zoom out a little bit. Again, well, that has been it's been a strong trend there. Okay, a strong trend there. Okay, and what we can see, but what I can see here is just from basically from Thursday's price. Okay, this blue level was the previous day's high, which we went up to, and then as you can see, we rejected it. Now, that's not a particularly double top, but we ended up here as a double bottom at the end of it. But if we go down, what we'll see is push. Let's go down here. Go. Let's see. Yeah. So that kind of move there would have been into the here you go. Into the news there, but that's what we're looking at. Double tops at previous levels. Remember, confluence of events. Price is pushed up, price has hit a previous area, price puts in a double top, price rejects and rolls away. Okay, and until it ends, not in the most pretty way, but you would say that this was a double bottom here before it rallied its way up there. Okay, and that's what we're just looking to identify. Okay, looking to see how price reacts at those particular highs and lows. And let's just see if there's this morning was a bit of a scrappy morning on the FX charts. Okay, it wasn't, and that's not Mondays tend to be a little bit, I find, a little bit hit and miss. Okay, sometimes they can be excellent, other times it can be like watching paint dry. Okay, that's welcome to trading. That's what everybody has to deal with. It's about having a plan and knowing what you're particularly looking for. Just let me have a look and see something this morning there that really, it's I think it's basically we've gone a little bit quiet. I think the world and his wife is probably waiting for some of the data to come out from both Nvidia, all right, but also from the political appointments for Trump. All right, so here we go. So this morning, dollar Swiss. Yep. So what we had here, kind of dollar Swiss came down to what was also the kind of the low from Friday. See how, and that's what we're interested in, the kind of lows itself, and you can see it rejected off it very strongly there as an intraday trader. And the area there, let's see if we go down to a little bit. Yeah, so that's what we're looking at here. So bang, price has made its push. It's come down to yesterday's low, which is Friday's low, and then what did we print here? We printed a double bottom, okay, and then price powered its way back up there, and that's what we're looking for. Remember, confluence of events. All right, identifying previous day's highs and lows, watching what happens when price gets there, and then if price prints a rejection pattern like a nice double bottom there, that is our opportunity for us to take our mean reversion trade, because 80% of the time on an intraday basis, markets are range bound. So when price pushes out like this and then reverses, okay, especially with a nice rejection pattern, that is our opportunity to trade back into the trade back into the range and stuff. And so that's kind of that's a very nice example from this morning there. Okay, and we'll see if any of the others have provided such opportunity. Okay, as I said, Mondays can be a little bit. Sometimes Mondays can be a little bit thing. Yeah, that's euro dollar came down to the sort of kind of, I think probably previous week's highs, but we're not massively intrigued there. Okay, Kiwi dollar. Right, let's see, how did it play out here? So we can see today that here we go. The market opens on the Sunday night, okay, pushes up, and then what we've got here is yesterday's low, which is basically the sort of Friday and previous week's lows, okay, which we can see are here. And what happens is sometimes it's a bit hard to see, but that's what price has done there, okay, and that's on the 30-minute chart. It's pushed down here, okay, and then as I said, it's that confluence of events, the pattern happening at a significant level, having already made a clear move in one direction, so that actually there is room and space for price to trade back into its range. That's what we're looking for. Okay, that's what we're looking for. We're just looking through here. From this morning, so I was on a train traveling this morning into London and stuff. But it's you can just give a chance, as we've just looked there, just go through 5-10 minutes, and it doesn't take very hard to identify. Once you've identified where those particular previous days highs and previous weeks highs and lows are, it's much easier to be able to identify, okay, and then you look to see, well, how does price react at these? How does price react at these, at these particular places? That's what we're interested to see. Let's just see if let's see on the 15-minute chart. Yeah, it looks. Yeah, so on the 30-minute chart, which is the kind of the main one I would be looking at. Okay, is that's what we're particularly looking at. So for those of you as an intraday trader, who might not necessarily be able to sit at the charts every day, well, what you can do is basically once you've identified the weekly highs and lows, well, then you can put in alerts so that price only just pings you when it's getting near to those particular previous days highs and lows. That in itself can allow you to go off and do your other work or your other businesses or whatever else you're doing with your time, and then only just be sort of pinged and interested once price actually gets there. And that's how I know lots of traders who trade this way, okay, how they basically manage to do that. All right, so we just had a little look at FX markets and such there. Let's finish off with, as always, let's have a little finish with a quick look at the US indices as we have opened. All right, we've been open, what's that, 25 minutes. You hear me always say the first kind of 15 minutes, trying to avoid, especially on a Monday, it can be a little bit, sometimes a little bit fraught, okay? If especially if there's been kind of, geopolitical news coming out, political news coming out over the weekend, that means that kind of US opening, the first 15 minutes can be a little bit, a little bit fraught. So I tend to just leave it alone. All right, so let's have a little look at what's going on the Dow. So what I'm looking at here is, we this morning. Remember, this is the kind of just bear with me 1 second. That's the wrong thing. This is kind of the overnight Asian session, and then we dropped our way down here, okay? And it looked like we were going to put in a double bottom there, but actually we flushed lower first, okay? But it's there's a double bottom there, okay? But you're into the end of the American session. That's Friday sort of evening. That's not really a good time to be putting trades on, right? Intraday trades the last few minutes. But if we have a little look at. It is certainly kind of price, as you can see, it's pivoted around there, okay? And what I might have been looking for as a double bottom actually turned itself into sort of an inverse head and shoulders there. Hopefully you can see that. So another reversal pattern at what is the Friday's low, what is the previous week's low, okay? So I'll be intrigued to see if it can carry its way out there on the Dow. Does it have enough what it takes to move itself up, all right, into the space we need it to? So let's let's have a little look at this. So here we go. I'm always intrigued, as I said. First, that's not what. Let's change that. I'm always intrigued, as I said. First 15 minutes of the American session, just to look at what it's doing for us, how it's setting itself up there for the start of our day. So. We're kind of just within the range there. If I look at 5-minute, 51-minute charts, it's just that's just been tightening up since it opened. Okay, tightening up, and now maybe we're just getting ready to make a move. Yeah, what I'm intrigued here, just is what I'm intrigued is that we are basically 200 period moving average, the 50s there. We are basically coiling up. We're taking out orders here, trying to take out orders both sides, and then maybe we'll get some clarity. Maybe we'll get a bit of that longer term bullishness. It's I'll just be keeping an eye on that. Let's keep that on the 1 minute chart and stuff. There's nothing really there for me to do at the moment, okay? But I'll just have a little look. Keep an eye on that. Let's have a look at the Nasdaq. What's the Nasdaq doing as it starts the session? So as always, just what's the particular sort of kind of highs and lows of the session so far? I'm just looking at that. Okay, so just looking at the first 15 minutes on the Nasdaq, see how it goes. We seem to have blown out of it there, okay, so far, don't we? Let's have a little look. Okay, interesting. I don't think so. So the 1 minute chart there is having broken out of the first 15-minute range, it's it's base there that you would look at that as that might be a cup and handle formation that we would be looking at it and stuff. So I would just keep an eye on that cup and handle before it pops up. That's what I'll be looking at there. Okay, ladies and gentlemen, so apologies, as always, time flies when you're having fun, and we have to draw to a close our session today. I hope you found that useful. I hope it's given you a bit of food for thought about how you can use highs and lows, previous days highs and lows, previous weeks highs and lows, even previous months, previous years, etc. Hope that's given you a little bit of insight into how you could use that. So be sure to go away and have a little look, do the exercises, okay? Just pick a couple of your favorite instruments and just see how they play out, okay, around previous days highs and lows. As always, thanks very much for joining us. I hope you have a fabulous trading week, and I hope you will join us next Monday for Monday Market Matters, where we're going to talk about looking at how to use fractals to start your trading week. Trade well, everybody, and I will speak to you soon. Cheers.